Everyone wants the entry. They want the green light. They want the secret formula, the magical pattern, the sure thing. It's human nature. The entire industry is built on that itch. Give me the winning trade. But here's how the market really works. The market waits for the undisciplined, the impulsive, and the desperate, and it strips them clean. The pros don't ask how to get in fast. They ask what tests their idea must pass before risking a single dollar. Jesse Livermore, one of the few men who built and lost entire fortunes in the market, didn't get rich by trading more. He got rich by trading less, by making sure every single trade was hunted, vetted, and run through a battery of tests before entry. Most traders today can't pass even one. So let's tear down the fantasy. Here are the 5 unbreakable tests every real trader must pass before taking any trade. Fail one, and you're gambling. Pass all 5, and you finally have professional odds. This lesson is for those who are tired of bleeding. This is for survivors. Test 1. Is the setup real, or are you forcing it? Here's the ugly truth. Most people don't trade their edge. They trade their boredom, their frustration, their FOMO. The market has been slow, so they invent setups that aren't really there. They bend their rules just to get a hit of hope or action. Livermore's first test is ruthless. Do you actually have a setup that matches your strategy? Has the pattern, trigger, or macro factor that aligns with your game plan appeared? And do you have the discipline to wait for it, even if it takes weeks? When you enter out of boredom, you invite disaster. Go back through your own trading history. How many trades were forced? Sizes too big, entries too early, or signals that didn't really fit your rules? Real traders can sit on the sidelines for days, weeks, sometimes months. Amateurs feel pain from inaction. Pros feel pain from undisciplined action. This is why 90% of professional trading is waiting. If your setup isn't crystal clear, you don't trade. No exceptions. Livermore once said, "It never was my thinking that made the big money for me. It always was my sitting." If you aren't bored and restless most days, you probably aren't trading a real edge. Test your idea. Is this really your setup? For real? Or are you just desperate to do something? Test 2. Do you know exactly where you're wrong? Most traders only know what they want to happen. They see the dream setup, imagine profit, picture the move. But professionals know exactly where they're wrong. Your get-in criteria is only half the battle. If you don't know, before entry, where your edge vanishes, where the idea is dead, you have no business risking money. Livermore never entered without knowing the death line. Not just a physical stop, though that matters, but also the conditions, price levels, or volume signals that tell him the setup has failed. This is the second test. If your trade goes against you, at what point do you admit defeat and get out? Amateurs decide their stop once they're already underwater, always moving it, always giving the trade more room, always hoping. Pros pre-decide the pain, pre-plan the exit, preload acceptance. If you can't write down, in one sentence, "I am wrong if this level breaks," you can't pass this test. If the stop is emotional instead of systematic, if the pain threshold moves, you're already at the mercy of the market. Look back. How many times did not having a clear "I am wrong" here cost you 10 or 20 times more than you planned? The market rewards only those who define defeat before they're in the game. Livermore's rule: the only consistency in speculation is the public's inability to take small losses. Don't be the public. Test 3. Can this trade destroy you or dent you? Survivors in this business always ask, is this a paper cut or an amputation if I'm wrong? The size of your risk, the structure of your position, must be built so that any single loss is just an annoyance. The moment you take a position that could cripple you, you've left the business of trading and entered the business of gambling. Livermore's 3% rule was legendary for a reason. No single trade, even one he believed in with absolute confidence, ever risked more than a trivial amount of his capital. He could be wrong 4 times out of 5 and still be one piece ahead of the crowd, because he was alive to play again. This test is brutal because your ego hates it. Everyone wants to bet big, get rich quick, double up. But the graveyard is full of traders who had conviction without discipline. Every trade you take must be sized, so your account, your mind, your career is protected. If the answer to this question isn't a flat, yes, this trade can only dent me, never destroy me, you have no business entering. Write this on your wall. The job is not to make a killing. The job is to survive. No trade, no matter how beautiful, should threaten your survival. Test 4. Is the reward at least twice the risk? At this price, in this market? Everyone wants the home run, but professionals want reliable singles that keep them alive while the world burns. The unspoken law of risk is that most setups, even the very best, won't work often enough to make profit unless the average winner is bigger than the average loser. The math is simple. If you win half the time, but your wins are only equal to your losses, you're spinning wheels. Livermore was obsessed with reward-to-risk ratios, but not just in a static way. He looked at the current market environment. Is volatility high or low? Are institutional players active, or is it retail noise? Has the move happened already, leaving scraps, or can this trade still run? Before you enter, test the math, honestly. Based on how price is moving now, with spreads, slippage, and volatility, if I am right, is my potential profit twice or more my risk? Most traders exaggerate the potential, kidding themselves, thinking, if it just goes here, I'll be rich. Reality is cruel. Price doesn't always give you the easy move. Amateurs enter based on dreams. Professionals enter based on math. If the reward risk is not real, not provable, not modeled on past performance and current conditions, you're betting against the odds. Don't trade fantasy trades. Test 5. Does this trade align with the big picture? Every day is filled with noise. News cycles, fake outs, false breakouts, manipulation. Most traders try to outsmart everything by reacting to every candle or every rumor. But the pros, the survivors, step back. They only act when their trade aligns with the higher time frame, the macro trend, the real structure of the market. Livermore didn't just read the tape. He read the environment. Was the overall market trending higher or lower? Was this stock moving with institutional size or retail hope? Was the sector in favor? Was the volume real or forced by desperate gamblers? If your trade is a counter-trend fade in a roaring bull market, beware. If you're longing weak stocks during sector rotation, you're betting against gravity. The secret few understand. The longer time frame is gravity. It defines which trades move smoothly and which fight chop. If your idea makes sense on the hourly, daily, and weekly, if it has context, you're in the right business. Livermore waited for everything to align before betting big. Most traders rush in with tunnel vision. Check your idea. Does this trade make sense in the context of the market's big moves? Or are you fighting an invisible enemy stronger than any logic? The big money is made when your trade's direction matches the tide. The final test. Can you do nothing after passing all 5? This is the hidden one, the one nobody talks about. Trading isn't about endless action. It's about relentless patience. Once you have all 5, your final job is to do nothing until the market says, now. Livermore often stalked trades for weeks before pulling the trigger. Most can't wait 5 minutes. Ask yourself, can you wait? Can you say no to every almost setup? Can you sit through discomfort, sweat, and boredom without breaking discipline? The losers always crumble at this stage. They let boredom or restlessness push them into subpar trades. The pro waits. That's why the pro profits. Livermore's process in action. A case study. Let's build a concrete example, Livermore style. 1929. The market's at an all-time high. Crowd is euphoric. Livermore stalks railroads. He passes every test. 1. The setup appears. Volume spikes, price gaps. He waits for confirmation. 2. He marks his level. If this price is breached, the thesis fails. 3. Positions are small, fractions of capital. If the thesis fails, it's a scratch, not a funeral. 4. Potential gain is triple the risk, based on prior moves and volatility. 5. Macro trend is downward. Institutions are unloading, not buying. He pounces, calm, planned, and wins big, because every test is passed, and he waits for the market to admit he's right before adding size. Most traders today would have been in and out 100 times. Livermore waited until the story aligned, the risk matched, and the reward was proven. That's how legends build accounts and survive decades. Why traders fail these tests? Every day, the average trader's process is so broken, it would be funny if it wasn't so tragic. The tests aren't even considered because habits, impulse, boredom, fear run the show. Trades are made while driving, eating, scrolling on the phone. Discipline is declared but never enforced. The amateur brain cannot sit still. It must chase. It must act. It must prove something to itself and others. It is wired for the next trade, not the right trade. Every missed test shaves years off a trading career. There's only one path to fixing this: brutal, systematic, repetitive self-accountability. Make a checklist. Print these 5 tests and slap them above your screen. Refuse to enter a trade where even one answer is uncertain or emotional. Every time you break the tests, review the damage in a journal. Make failing cost you. Make pain your coach, not your punishment. What changes when you pass the tests? When you only take trades that pass, everything quiets. The number of trades drops. Your stress drops. Your clarity rises. Small, consistent wins replace wild swings. Trading stops being about survival and becomes about compounding. Losses become minor, predictable, planned for. Account curves flatten, volatility fades, equity rises. You stop caring about news, noise, Twitter calls, market hype, because you're finally trading your edge, your plan, your game, not somebody else's. You realize you're running a business now, not just chasing dopamine hits. That's when the magic happens. That's when one good streak of discipline pays more than a year of lucky guesses. The profound conclusion: trading is not a game of quick riches. It is not a parade of lucky entries and stubborn hope. It is the slow, relentless grind of discipline over ego. When you pass Livermore's 5 tests before action, you join the minority that survives long enough to matter. The average trader will hear these tests and ignore them. The successful will engrave them in their mind and apply them until doing anything else feels painful. That's the difference between practitioners and pretenders. That's the line between surviving and perishing. Passing the 5 tests isn't exciting. It's not glamorous, but it's the only way forward in a market built to destroy the undisciplined. Trade less, test more, and never put money at risk until you can look yourself in the eye and answer yes to every single question. Repeat the mantras. The market does not care if you win or lose. The only thing that matters is discipline, the relentless application of a repeatable edge. Nobody is coming. You are the only risk manager who matters. Tell me, honestly, in the comments, which of these tests do you fail most often, and why? What do you plan to change tomorrow to prevent another undisciplined loss? If you want the full framework for professional entries and risk, see the link below. Subscribe for more brutal truths, more exposure of the hidden systems that decide who wins and who walks away broke. Because in the end, the tests never stop. Only the strong, the patient, and the disciplined will survive. Which one are you? The market is waiting for your answer.